Ladies and gentlemen, welcome to a fascinating journey through insurance sector. I hope you have watched previous video, which is the first part of the chapter Risk and Theory of Probability on Concept of Risk. In this video, we shall continue on this chapter with Theory of Probability. Without wasting time, let's dive into it. As we all know, the problem of pure risk can be minimized to some extent, but it cannot be eliminated altogether. Hence, it is found necessary to devise some technique or method to deal with pure risk and its financial consequences. Pure risks occur with a degree of regularity over a period of time and as a result are generally predictable based on past experience and application of statistical laws and techniques. Here, the basic concept of insurance arises: transfer or shifting of a risk from an individual to a group, sharing of losses on some equitable basis by all members of the group. From the analysis for fixing the premium, three broad principles emerge. Rate of contribution. Rate of contribution is premium paid by the individual for insuring the risk, and it should be collected on equitable basis according to its risk. Degree of hazard. The risk varies according to the degree of hazard or exposure to loss or damage of property concerned. Classification of property. Classification of various types of property is necessary to fix the rate of premium on a fair and equitable basis, so that the more hazardous carries a higher rate of premium. Here, in the case of wooden construction, the risk of fire is greater when compared with concrete building. Hence, the premium for the wooden building is charged higher than concrete building. In motor vehicles, the goods vehicles are more exposed to the accidental loss or damage than private cars. Hence, goods vehicles are charged higher than personal vehicles. To calculate premiums along with satisfying all these concepts, here comes the theory of probability. Theory of probability is the technique of forecasting future losses based on past losses. The theory of probability is also known as law of large numbers or law of averages. It is a branch of mathematics that deals with the analysis of uncertainty and randomness. When applied to the insurance sector, the theory of probability helps insurer to calculate the likelihood of certain events occurring, such as accident, illness, natural disasters, or property damages. This enables insurer to assess the risk associated with offering coverage and to determine the appropriate premiums. As we know, the rate of premium is arrived at on the basis of past losses. The statistical data regarding the past losses is most essential for fixing the premium rates. To fix the premium rates, it is necessary to give a mathematical value to the risk. In theory of probability, the risk or the event is given a numerical value between 0 and 1. The event or hazards which are impossible are given the value of 0, and the events which are bound to occur are given a value of 1. Events that may or may not occur are given a value between 0 and 1. For achieving the mathematical value, it is needed to collect the statistical data of past losses for a required period of time. Here, we need to know that the data is most important. The more data collected and analyzed, the more accurate rate of premium can be calculated. For clear understanding, let us assume following illustrations. For mathematical value of risk, loss is expressed as percentage. It may be expressed in formula as L by V into 100, where L stands for sum of total losses, where V stands for total value of motorcycles. Let us assume total number of motorcycles are 1000. Value of motorcycle 50,000. Total value of vehicles is 5 crores. Let us say that the data collected is for a period of 10 years. Total losses or theft which are occurred in the span of 10 years are 50, which means in this case on an average the lost vehicles per year are 5. Value of total loss or theft vehicles in an year is 2,50,000. Applying the formula of probability L by V into 100 for calculating the premium, 2,50,000 by 5 crore into 100, which is equal to half percent, which means the value of a premium is 250 rupees. The amount 250 is called as pure premium, which is later loaded with loss payment, loss expenses, agency commission, expenses of management, margin for unexpected loss other than calculated, margin for profits. With all this loaded, the pure premium developed to a final premium of rupees approximately 300. This assumption is made to provide a simple understanding how the insurance system works. But in actual situation, the number of total losses per year may vary from year to year. Fixing the premiums not only calls for mathematical calculation based on past experiences, but also a great deal of judgment and foresight. In tariff classes of business, the rates of premiums are fixed by the Tariff Advisory Committee, which is a statutory body established under the Insurance Act 1938 and operating under the direction and control of Insurance Regulatory and Development Authority. With this complete summary of this chapter, we got the knowledge on how the insurance system works. There are three important elements on which the concept of insurance works. Firstly, the subject matter of insurance. It might be human life exposed to death or disablement due to accident, or property such as building, machinery, goods, motor vehicles, ships, etc. may expose to loss or damage. Secondly, the peril which may cause the loss or damage. Example, fire, burglary, storm, earthquake, explosion, accidental bodily injury, etc. Thirdly, the financial loss which results from the damage or destruction of the subject matter. As we conclude our exploration of the theory of probability in the insurance sector, we hope you have gained a deeper appreciation of the complex calculation that strengthen this vital industry. With this, the first chapter of S01 Risk and Theory of Probability completes. As I promised earlier, to share the important topics from which questions may asked in the exams of Insurance Institute of India, here we go. Which risk comes under business risk or pure risk? You need to differentiate and have a clear understanding which risk comes under which category. In exam, they may give a situation like a godown of textiles was burned to ashes due to short circuit of electrical system. To confuse you, you may be given the option to this type of questions like mechanical risk, business risk, electrical risk and pure risk. In these options you may be confused as the textile godown was run as a part of business, hence it might be a business risk. You may also be confused since the incident happened due to electrical short circuit, so it might be electrical risk, but you need to know that it is the cause of accident. It is a peril which caused damage. The pure risk is the correct answer. The other key points to consider are what is speculative risk, what is dynamic risk, which type of risks are covered under insurance, what is diversification and how it helps to minimize the losses, what is theory of probability, what is pure premium and how to calculate it. Here in the questions, you may be given a time period, total number of vehicles, value of the vehicles, total number of losses occurred in the given time period and asked to calculate the premium. You may be also given the age of the vehicle, type of the vehicle, class of the vehicle to confuse you, but you need to remember that Formula to calculate the pure premium is L by V into 100, where L is loss value per year, V is total value of the vehicles. Which type of property charge higher in any given properties in the question? As we discussed earlier, the wooden construction is charged higher than concrete construction. The commercial vehicles is charged higher than personal vehicles. What are the insurable risks and what are uninsurable risks? Intentional damage like self-injury, suicidal attempts are not insurable in any policy. These are the main topics of the chapter on which most of the questions are asked. With this, I take your leave. If you find this video informative, like the video and comment your doubts below and topics to be covered in the next chapter of this subject, and share with those who really need information. Thanks for watching. Until next time, stay safe and take care.